My name is Michael Guyett, publisher of the Lead Lag Report. Joining me for the hour is the man known as Uncle Pac here on Twitter. We should have a really good back and forth conversation. Uncle Pac, introduce yourself to the audience. Who are you? What's your background? How did you get involved, interested in the markets, in market making, and what are you doing now?
Thank you, man. Well, cool. And now you're going to call me Uncle, so that's all well and good. Well, I mean, long story short, when I was I'm from rural South Georgia, where many stock traders come from. And I actually had an uncle that worked for Morgan Keegan out in Memphis, Tennessee. And nobody in my family ever would guess that I would graduate from college. They weren't sure I was going to graduate high school. And so anyhow, long short, this uncle made a joke to me one time, said, "Hey, if you ever graduate from college, I got you a job." And sure enough, I managed to cram a bachelor's degree into 6 years with some hard studying. And called him up a job. I started off as a stockbroker with J.C. Bradford and Company in Athens, Georgia. That's how I got into business. And then I made it into the market making side. Man, of course, when I started on the NASDAQ, I think was right at 600 or 700, somewhere along that neighborhood. We did everything by phones, dropped tickets, had runners, rang the bells, all that good stuff. I went from making markets to basically going out on my own as a trader. I ended up running 2 different prop firm offices for firms that are actually some of the day trading firms that are out in New York now. I'm not going to call any names, but the ones that are, a lot of people are very familiar with and a lot of traders still using. I still do some business with those guys, and I'm basically just trading ultimate scalper. Do some long-term stuff, but I'm more of a pure day trader. That's just kind of what I'm good at. And that's what I'm doing right now. Trading the markets day by day and taking it one day at a time.
Do you think that the experience of being in the South and maybe being skeptical of Wall Street to some extent, which I assume you probably have some degree of, like I do, that gives you maybe a little bit of a unique perspective on markets and maybe some skepticism around the way the system works?
Well, I mean, you've been inside the system and I've been inside the system, and you knowing how the system works. Do I need to be politically correct on your show?
Fuck no. You're good. You're good.
Hell yes. Now we can talk. No, I mean, the truth of the matter is, I don't think you've been following me very long. I've always just been some people think I'm a gruff guy, and I'm really not. What I am is I'm a guy that operates by truth and truth only. And I might get ahead of ourselves on some of the topics we're going to talk about, but, the truth, is where most traders cannot get to. And that's why they hold on to these stupid losses and stuff, is they can't be honest with themselves. And so, I just tell the truth the way I see it. I mean, like, my personal experience and what I've seen from Wall Street, man, especially these deals that they do, man, it's a complete ripoff. It's a fleecing of the life. It's a fleecing of the people. I mean, they do not understand what's going on, like what's going on in the video right now. I mean, like, hey, it's a complete pump up. They announced an offering and they had everything you could do, and it's on the shelf, and the shelf is used to manipulate the price of the stock. And so, yeah, I mean, it's not that I'm necessarily have a skeptical opinion. It's just that if you look at the truth of the matter is, my opinion is pretty accurate. And not that I'm always right, I'm not.
You know what always kills me is that people say that price is truth. And I always have a problem with that. It's like price changes every day, which means truth changes every day. So it really is true, right? This is a business purely of opinion, but it's also a business of trying to take advantage of other people's wrong opinions. Okay, so you mentioned the market making side. Just for the audience, explain what sort of traditional market making is. I'll preface this by saying I remember, when I was 16, I worked on the floor of the New York Stock Exchange, and I remember it being busy and full, and there were market makers and there were people running back and forth. I was one of them. That world is largely done because everything is digitized now. What is market making in the past, and what is it now?
When I started, there was no E-Trades. There were no anything. If you wanted to own stock, you had to call a stockbroker when I started. And the stockbrokers, when somebody called and placed let's just say they called, "Hey, I want to buy 100 shares of Caterpillar or Home Depot or whatever it is," then the runners would drop the tickets to the trading desk, and then we would fill their order. And of course, then we write a ticket, mark it up, gack them. We give them those commission-free trades that you see, but we actually steal a quarter from it. The stuff you don't see inside the spread. Of course, now Also, when I started, we were trading in fractions. So everything was just like a teeny was 30-second, eighth, quarter, whatever. And so, and of course, that's another subject, but I'll just give you a 30-second dissertation on why we went to decimals. Decimals were for the benefit of logarithms is why that happened. I can tell you, oh, it's better for all the clients, better for all that. It's because logarithms operate better on pennies than they do fractions. So, but yeah, actually, I don't really, the traditional market making desk. Now I've been away from market making for years. And with the development of the ECNs, the electronic communications network, pretty much everybody that's listening. And if you're trading today, you're trading on an ECN. You just don't know which one you're doing, your Archipelago, Arca is an ECN. And at the time, there was a bunch of small ones like Daytech, Island, Instinet, and now Instinet. I remember when Instinet came to, now it was a big deal because it used to be just the market makers and the Instinet. And the Instinet would give you access to, that's where you could finally do invisible orders, hydro orders. Now, so they don't let the public do that. And it's a distance. The market makers, they don't play by the same rules as us, the general public trading. So, but anyhow, I know I kind of ran around your question there. Sorry.
Yeah, no. And by the way, that point about the decimalization being good for algos I think it's spot on. It also, I'd argue, made it more challenging just for the entire industry to make profit because now your spread's obviously a lot less, compared to when you had the days of teenies, so to speak. And listen, I remember my father calling up brokers and tell them, buy, any number of shares and work the order was the phrase that, my father would always use. Now you got full on algos that are working the order and you don't even know how to route it, right? So it's the entire structure of the market has changed. At that point, talk about just from your own observations, how the sort of evolution of the mechanics of trading have either made it easier or harder to profit.
There's no emotion in this market. And, emotion used to play a big part of the stock market. You got I see people, they have these the fear of greed indicator, whatever, and I don't really understand that. I'm not saying whether it's right or wrong, it's just something I personally don't use. Because, I don't know what the figure, but I've talked to some people and I still have a lot of connections that I talk to, people that manage billions of dollars and with the algos, it's not a pure market anymore. There's a whole lot of other factors too that the games that they're playing with the ODT market and the gammas and that kind of stuff. Now all you got to do is get a gamma flip and you got a big move one way or the other. It is back in the day. It was actually a lot easier before all the algos and the electronic trading because you can look at stuff and if you don't know exactly how algos work, you'll never know why this stock turned or stopped or whatever there. And so the execution for people's orders are better today just because you got so much, the market is so liquid. I forget what stock, I think it was Carvana last week, traded 180 million shares on one day. I can remember the days that the entire NASDAQ wouldn't trade 180 million shares. If you had 100,000 share order, it may take you 3 days to get it out without crashing the stock. And that's what your dad was meaning by work the order. He didn't want to affect the price. So he wanted the guy just to kind of work the order, don't offer it out, sit on the bed, let it come to you, that kind of stuff. Yeah. Honestly, it's tougher now. In my opinion, just from now, the liquidity part is great. And because also you think about the commissions right now, everybody's offered free commissions and they're not getting to trade for free, but it does not affect their P&L. So they get for free. So with the liquidity, that's why I tell people, why do you hold a loser? I said, you can buy and sell for nothing. Okay. It's not costing you any money. That's, I always preach to people, hey, find your stop. If I'm scalping, I pick if I'm trading, say, a 15-minute candle, I'm going to pick probably the candle before it, or maybe one a little bit with the wick a little bit lower. But, just kind of adding on to what you asked here. Liquidity is wonderful and I don't want liquidity to go away. the volatility's kind of gone away for right now. And of course we got volatility, but not like, look at the VIX. Like we're going in single digits now. So yeah, I hope that answered your question.
Yeah. And actually I love that point about the fear of greed index because, there's the emotion that you see in the wording and the way that people frame things on FinTwit. And then there's the reality that, most markets are being driven by algos, which are not emotional by any means. So you're right. There's an interesting sort of disconnect in terms of just the way that people think about markets and what's actually driving markets.
Well, exactly. And it's like, here's the thing about it. Like when you see, and I know you've got everybody here that's listening, that's trading, have seen seen a stock and it just like makes this monster move in like 30, 40 seconds. That's just algos fighting over itself. And like these, and it hadn't been recently. Remember probably like 6 months ago when all these like little Chinese offerings were coming out, they would be like $8 and to 200 overnight. And it was just all arrows feeding off it.
Right. Exactly right. Which makes it interesting because it means that people are probably, using things as signals, which maybe is just more random than anything else. But okay. So I agree with you on the way things have changed. Let's talk about just the idea of a market that moves together for a few minutes here. There was that old saying that a rising tide lifts all boats. A lot of that changed since zero interest rate policy, right? So you ended up having the FANGs take over. You ended up having it be a U.S. dominated landscape as opposed to international diversification benefiting and being additive to returns. This year, you and I both know, everybody in this Twitter space knows this is one of the most deceptive markets, I'd argue, in history because it's being driven by just a few select large cap, mega cap stocks. Do you think that market making and liquidity and all this has added to this kind of concentration dynamic?
Something, and I've spent a lot of time studying stuff like what you just talked about. And something that, and unfortunately, I guess I'm the nerd guy, I spent time after 2008, 2009, they totally revamped the wording on the Federal Reserve and what they could do pertaining to markets. And I've been making a case and on some of the spaces that I've done and people that follow me that in October, probably, and it's probably larger, but I'm going to err on the safe side. 50% of the U.S. banks became undercapitalized in October. And the bond market was selling off got down. I think the 20-year got down to, the TOT got down to, heck, I don't remember, like 80, 85, 90, somewhere along there. And it's rallied since then. I think the bonds are rallying this morning. Trading a little blind this morning to, I'm not trading at all because we got a huge likeness on here. So I'm kind of in the dark with pulling up quotes. I was going to give you the quote on, but I think that, and just, of course, this is my thinking, and a lot of people disagree. If you had half the U.S. banks failing, what do we need to do to stop these banks from failing? And what's going on is what needed to happen. The bonds needed to rally. The banks couldn't take any more hemorrhaging in the bond market. And so we've started inflating stocks now. How much money, depending on how much money they're going to print, they're going to print. I think that, my worries, I've been telling people, it's like, hey, are we going to be a Venezuela here? Are we going to have this melt up from hell? And then there's I'm probably going way further than you want to go with this. Now you got to start talking about, hey, the value of the dollar. Are we just going to keep diminishing this? Technically, we was talking earlier about like ECMs and all that stuff and how the pennies made it. What they did, making it pennies too, they also stopped competition. And that's along the lines, if you follow banks and if you've been around this industry, about every 10 years, 12 years, we have to bleed out the regional banks, So, if you go back and if you ever read Michael, have you ever read the book, The Creature from Jekyll Island?
Yeah, and it's funny, a lot of people reference that book in these spaces.
So, no, I'm just actually on vacation in Jekyll Island. I live in Georgia, and it's right off the coast of Georgia. And so if you ever read that book, things have not changed from what's going on in that book. In my opinion, I'm not a conspiracy guy. I'm just looking at reading because if you go in and read the Federal Reserve thing, they've got powers now that they've never had. And if you've been watching the market, you've seen these days where we were really selling off and we was at a point of total breakdown and all of a sudden stuff just rallies out of nowhere from no support lines, no algo lines, just rally from complete I don't know how close you watch the cues, but they just bring in these huge 1 minute volume spikes, like 1.5 million shares. The cues are print. And when it does, it just, every time I see that print, and it happens about once a week, the market rallies. And it's just something, just an aberration I've noticed. But I think there's a lot of, what's the right word here? I think there's money being injected. There's money being injected into the market to keep us where we're at. That's what I'm thinking. If you look last week at the consumer cyclicals, the basic materials, the equipment makers, all of these companies or all these sectors were totally breaking down. They were breaking out of bear flags, just going to go to the downside. And then like the next 2 days, 3 days, they had like a 10% rally, just out of the blue. I thought they'd be breaking down. No, I wasn't sure, but I'm just saying that it was a miracle turnaround.
Yeah. And by the way, that I'm glad you said it came out of nowhere, because I think a lot of people are beating their chest saying, oh, new skull caps are going to run next week or whatever it is. Yeah, I have to highlight it in my own research. The likelihood was there. And I keep saying, I think we're probably in this kind of stupid small cap rally phase before a risk off, type of, juncture research. But that's the thing about this market, right? It happens to be that the case that these laggards can sometimes move so aggressively on the upside because the algos are chiming in and chasing, right? That it becomes hard for anybody that's not algo driven to try to catch this stuff. And oftentimes they just get whipsawed back.
Yeah. I mean, I was watching the sectors real close, and I was just amazed at everybody, especially the conglomerates. I don't know if you looked at the chart of conglomerates. They were just absolutely getting killed. I'm talking about murder. I think the consumer cyclicals, I think the equipment makers. I had about 20 sectors. I can't remember off the top of my head. They were all just gack ugly. And I'm like, there's absolutely no way that we're going to keep rallying the Qs or the spies or whatever with this kind of undermine, and you know what, the market hadn't really, the Qs are coming off a little bit right here. Of course, they're still up for today, but Friday was an up day. But did you notice on Friday, the decliners led the advancers 2-1 on Friday?
Yeah, no, and which goes back to the breadth. This is a very uneven, in quote, new bull market.
Here's the thing about it. Sometimes, and I tell people this all the time, the one thing that I don't do is I don't argue with the market. Do I agree with what's going on in the market? I don't. I really don't. But I'm still trading. If it's a real simple rule, I'll share with everybody, and is that if I'm going to go long the stock, it needs to be above its averages. And I don't care what average you use. Some people use the 5 to 8, 7, 10, 15, whatever average you use. I like to use a lot of them. I'll look at stuff on all different time frames, and but if it's not above, say, the 8, 21 to 52, I like for it to be above its averages. And I like for it to come back and test. And now I think I've got a good long term. And right now, I like these sectors we just talked about. They're all way below their moving averages. Now they've rallied, but they still have not rallied up to their averages. And I think once they reach their averages, I think it's time to lay in a short. Just my opinion. I'm not telling you to short it. I'm just saying that's the kind of short setup I look for. So, and now I go back and look at 2008, 2009. We had a tremendous rally like this in 2008, 2009. Matter of fact, it rallied, I think it rallied from the lows in 08. And it was in the summer we made the lows, and I think it rallied for like 9 months. And it almost made new highs. It almost made a perfect double top. Now, I might be a little wrong on this, but I'm pretty sure I'm pretty accurate what I'm saying. And then we rolled over and made new lows. I'm talking about, like that 9-month rally was wiped out in like no time. And, who knows? If you throw in the election year stuff where the market's normally positive, do we print money? Do we just, and it's something we hadn't even talked about. All of this is with an inverted yield curve. I've never seen a bull market with the inverted yield curve. Are we going to rally the bonds here uninverted? We'll just have to wait and see.
Yeah, no, I definitely want to expand on that. But I want to frame all that in the context of, which is kind of your primary style, right? Which is on the scalping side of things. Because I got to assume that, even though you're very short term and doing intraday scalping, you've got to keep in mind, the volatility dynamic, the macro environment, because maybe it informs the way you do the scalping, at least I assume. So maybe for the audience, just explain what scalping is, and then how do you factor in sort of longer term things going on in the marketplace to very short term timeframes?
I actually went over, told some people this last week that when for a scalp day trade, I do a lot of research. I mean, more research than people would ever think. Because I go back and look at all the time frame charts. I'll go back. I'll go yearly, quarterly, monthly, weekly, daily, hourly, because I understand how it goes. And so what I'll do is I'll go find, hey, what's it got to do to be a breakout on the month? What's it got to do to be a breakout on the week? What's it got to do to be a breakout on the quarterly? What's it got to do to be a breakout on the day? What's it got to do to be a breakout on the hour? What's it got to do to be a breakout on the 30? What's it got to do to be a breakout on 15 to 5 to 2 to 1? I will do all of those time frames. And I have a screen that I set. I'll have 9 charts of the same stock. And I'll have all these different time frames, and I'll have the triggers marked on all of them. And then I set my alerts for the prices of all of these. Like where if I'm just going to make up some stuff here. Like if it was Tesla, okay, so Tesla, I'm going to set an alert for it's and I'm just making this up. If you're a Tesla trader, don't listen. This is just me making it. Matter of fact, let's just call it the widget instead of Tesla, because somebody will say, oh, you said Tesla. So I got this widget company, and it's got a monthly break of 100. It's got a weekly at 101. It's got these different break points. And if you can find, and I'll tell you a really good one that I found that some people traded with me a while back, I think about 3 months ago. In-phase energy, EMPH, it had just all of these triggers just lined up, just like dominoes. And if you remember, it was one of those days that, I think the thing was down like 40 points in a day. And it was just, it just kept triggering, just bam, bam. And it was just one of those days where you asked me, how I scalp. That's what I look for. I look for multiple triggers on a day trade. And if I can find multiple triggers on a day trade, that's where I like to hang out. But also, like last week, I traded Carvana. Yes, a Nazi stock. And I think Carvana is probably, probably not going to be around forever. But it's, maybe they will be. I don't know. I just buying a box of Cracker Jacks, like, a car, but anyhow, on something like that, it had multiple triggers last week, and that's why it made that big rip in that one day. And that was all. There was no news stories. There was no nothing. It was just, you had a stock that hit multiple triggers. And I think that's how I normally approach it. Now, I'm also very good. You can just put me in front of the stock, and I can look at a day chart and find ways to trade it. I like to trade inside candles that are sitting on averages. I trade candle formations, whether it be a shooting star or whatever, the doji, whether it bullets, I look at the chart patterns, and if they're set up on my averages like I like it, then I'll make a trade off of that too. But I'm real adamant about hey, the biggest difference between, say, me and somebody is I don't have a problem selling. I don't have an ego. And, I can act like I have an ego, but the truth is what I think, I know for a fact, what I think does not matter. It does not matter what the hell I think. I got some thoughts, and sometimes they're totally wrong. But you know what? I told somebody the other day, I said, that listens to me. I told him, I was like, hey, this is the case. Hey, look, I'm totally wrong on this, but see, I don't have a problem flipping to the other side. If the stock doesn't sell short, then it's sitting up long. Very rarely do you have a stock that's just going to say, hey, screw it, I'm just going sideways. You just got to be able to, I had an old trader tell me one time, he said, if you sell your position, are you going short? I was like, no. He goes, then why are you selling your position? You sell your position when you're ready to go short. So, how many people go from, selling their long to going short on stock? Not many people do that. But a lot of times I'll do that. Especially if they get a spending above their averages, then that's something else I would have to take time to really explain.
Just to reset the room for the remaining 20 minutes. Everybody here, please make sure you follow Uncle Pac on Twitter. And if any of you want to come up and ask questions, don't hesitate to click on that bottom left mic request button. And as I keep referencing, this will be an under Lead Lag Live on all of your favorite podcast platforms. You find that trading, on a very short-term basis, individual stocks is a bit of a lost art. I feel like a lot of people have just moved on to trading SPYs or other ETFs, futures, but, kind of the company specific trading, I get the sense, has been kind of minimized in the last several years.
Yeah, I do. If I really have a strong setup on the SPYs or the Qs, most of the time, though, if I have something I really like on SPYs and Qs, I actually go and I'll trade ES or NQ on the futures. But I do trade sometimes, like last year when the market was going down, I always was carrying some Qs short just kind of as a hedge. if I was long something. But, you look at it, I tell people that, and here's something else that I think people should do is, especially newer traders, they need to get to know the personalities of the stocks they trade. Is a stock gappy? Is it liquid? Is it pop a point, not give you liquidity? There's stocks out there that I don't trade because I'm actually looking up down my list trying to give an example. Heck, I can't find one. It doesn't really matter. But no, I mean, that's one of the things I do. And I have about 50 stocks that's kind of like my bread and butter stocks. And out of those 50, something's usually set up. One or two or three of them I've set up for a trade. I already know where all the triggers are. I have them programmed in my computer. And, sometimes I'm sitting here and not watching something and an alert will come up and I already know what I'm going to do when the alert comes up. And so, when it comes up, I put in my order bank. I'm not having to go chart it. I've already done that part of the program. And I think people need to get to that point because this is a game of speed. And I was joking somebody about, are you trading on a level 2 or using a keyboard or using a mouse? I use a keyboard with hotkeys. And I mean, it's the same keyboard that I had set up 20 years ago. Matter of fact, some of y'all know, if you know what QAPNL means, you're a trader. So, but anyhow, I don't know whether I answered your question, just feeding you some fluff here, man.
Yeah, no, that's good. Okay. So you mentioned sort of multiple time frames to try to get you a high probability type of setup. Are there particular stocks, industries, not financial advice, obviously, but things that, from your way of looking at things are kind of all aligning for either a long trade or a short trade, with the caveat that I'm just not a fan of shorting, but just in general things that you think are high probability for multiple time frames?
Well, I'm with you on the short end. Now last year it I stayed short most of all the year. I mean, just the people that traded with me, we were short some of those high flyers like Karma, like Shop, like Airbnb, but yeah, I mean, people, I'm going to come back to that question, but here's something I always tell people. Remember, Wall Street's job, their only job is to sell you stock. That's your job. That's their job. They are raising money and they sell you the stock to raise that money. That's what they do. That's how they make money. It's like, let's go back to NVIDIA. NVIDIA, they're sitting there with billions of dollars in cash, announce a buyback and an offering at the same time. Think about it. So that's their job. If this market wants to melt up, hey, melt up. I'm going to go with you. I'm not going to fight you. I don't agree with you going up because I think it'll be bad. I think it's personally bad. Not I guess we'll find out. CPI and PI come out. And of course, we could talk about that for a while because they keep changing the numbers on CPI. And basically what we got, cayenne pepper and Tabasco sauce on the CPI now.
It's not even lunchtime, but I'm getting hungry now that you said that. So, okay. Right. Hold on. But let's go back to that point about multiple time frames and kind of anything that's perking up for you. Any interesting opportunities that you think are on the way? I hear you on the melt up. I mean, I think if you are going to have a further move higher, it probably does have to broaden out, right? So there is probably some room for the consumer play. It's just on an oversold basis, right? I keep mentioning that retailers have looked so terrible that they're probably due for some kind of a rebound. A lot of consumer discretionary stocks look like they're going to have some momentum, but where are you kind of focusing your long average?
I mean, it's hard to, last night I was looking at a chart of Boeing. Boeing's trying to break out of this range it's been in for 3 or 4 months. Yeah, I think so. It's been in this 196, 210, 215 area. Boeing, if you're an individual stock, I was looking at Boeing last night. You got Boeing sitting here with 2 inside days in a row off a big golfing, bullish engulfing that got above a trend line. So, Boeing could be one that could break out here. Netflix is another one I've been looking at. I've actually been preaching Netflix, but Netflix is, it's made these gains. It went from 340 to this 419 level. It's inside a day right here. Netflix hit above the 425, 426 area. You could see another 30, 40 points on Netflix. If the market, if conditions present themselves correctly. I'm not saying go buy Netflix here. What I'm saying is watch Netflix, and if it does break out above higher here, you might get a nice move there. what else was I looking at last night? I actually got my list right here. The video. I've been, talking about the video, kind of bashing the video. But if you look at the video, man, when it got up, up that 100 points from earnings, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You got 12 trading days. It's for 2 weeks now. The video's just been grinding right here from about 372 to this 400 level. And I told some people last night, I did a space last night. I was like, I would not short a video here. I'm not saying I'm going long here, but I wouldn't short it here. The only way I would short it is if it went back and broke the opening, the lower wick around 360, 850, which is, 20 points lower. Then I think you've got some downside risk. But whichever way NVIDIA breaks from here, whether it breaks the lower wick from what date was that? May 25th. I would look for, if it loses that wick, that lower wick, I would look for a short there. And then if it breaks up here, then who knows? The video is at all-time highs, which is hard to believe, but it is, and you can't argue with it. And it looks like a bull flag here to me, but we can go in either direction here. But that's where I'm looking at. I've been looking at the video, Netflix, Boeing. I think we talked about Costco last night, and Baba was sitting here with 3 inside days. I ain't looking at Baba this morning. Baba was trading on 3 inside days, which, it looks like it's trying to break out of it.
Yeah, the defense side gets to be interesting, which maybe we can tease out a bit more. But I want to go to the name of the space, tips and common mistakes. Because, you mentioned you've been on a number of these spaces. I tune in every now and then, just I'm curious to hear what people say. And, it's a bunch of, people ranting on individual stocks and then kind of ranting against the Fed. But really, people kind of talk about, how to think about avoiding mistakes. So you've been in business for over 3 decades. You see a lot of traders. You mentioned the prop side. So I'm sure you interact with a lot of novices that came in and blew out their accounts. What are some of the major mistakes that you observe people make time and time again?
It's kind of funny. What I'm going to say is so simple, but it's the major problem. I can always make a joke. Have you ever seen a trader that struggled with buying? No. Most traders that are struggling struggle because they don't know how to sell. They refuse to sell. I don't have a problem. I may, on some scalp trades, I may enter it and I may be out of the thing in 1 minute, maybe 30 seconds sometimes, because I always make a joke, but it's the truth. I don't need proof I'm stupid. Okay. I don't need this stock to prove me wrong. I know that it didn't act like I wanted it to act, and I sell it. If a stock is not acting, especially if you're a scalper and you're a day trader, if it's not acting like you want it to act, if it's not moving the way you want it to move, then you sell it. You get out of it. You get flat. That's the name of the business, preservation of capital. And people would rather lose money than miss a trade. That's a whole nother, this is a psychological talk, and I'll talk about it briefly. And if you want to go further, we will. But I always tell people the reason this happened is because your ego, who is your enemy, you're the person that wants to kill you and self-destruct you, will not let you sell this because you're arguing with what's going on. And you really, when you shouldn't have an opinion, does an algo have an opinion? No, it does not. It just reacts. And that's what you need to, this is a reaction business and nothing else. If you got your reaction points, I call them triggers. If you know what your triggers are, you know what your stops are, and then you honor them. And I actually was having this conversation with somebody that was struggling last week. And I told them, I was like, when I was a market maker, we had limits. We had stop loss limits. You never whatever it was, 15, 20 grand, 25. I don't remember what they were at the time. But if you went over those, you got called to the principal's office. And it was a manager, it wasn't a principal, but it was what we always called him. You got called, with them 2 fingers to his corner office, and they would scold you. And if you did that enough times, you would get fired. So I tell people, I was like, hey, how many times, if you tell me what your stop loss or your stop limit is, how many times would I have fired you in the last year? Because people don't look at it as, hey, this is your job. Okay. This is your job, and you're your boss, and you're accountable for your actions. Everything you do is a choice. You didn't get stuck in a trade. That's just the dumbest damn thing I've ever heard. I got stuck in a trade. I just if I could reach out and slap somebody when they tell me that, I got stuck. No, you didn't get stuck, dumbass. You didn't sell it. And it's not being stuck. It's called you sat there frozen in fear and didn't do what you were supposed to do. And so, I guess the number one thing, no trader would ever have a problem if they would sell their losers. Some of them are not coming back. They're not. They're like Carvana. If you bought Carvana at 200, chances are you're not going to get 200 out of Carvana. Or any of these stocks that they went, or DoorDash, or any of these stocks that went, the IPOs that went out like 18 months ago, 2 years ago, most of them are already reached their all-time highs. I might be wrong. We have a melt up, but I'm just saying that the number one thing is if you will close your losers with a small loss, you'll never have a monster loss. And he's like, well, but I sold it. And as soon as I sold it, it went up. So what? That's going to happen. Here's another thing, talking about like problems traders have is if they sell it, if you're going to continue watching that same stock, if it moves higher and sets up, they don't trade it. They walk away from it. And that's okay. There's a lot of times if I have a losing stock, I'll just take it off my screen because it's not like I won't, because there's so many things out there that you can trade. I can find something else. But I also will sell. So let's just say if I'm trading something that's 100 and it drops down, and I have a stop at 99, I'll sell it, but then it rallies back to 100 and gets back up into above the averages inside a 15-minute candle or something. I'll buy it again. That's not, here's the thing. You've heard people preach price and say, I never preach price. Price is important, but what I preach is your setup. And it's not, your setup is, you can say price sets it up, but I operate by the candle, not necessarily the price. And so you get confused of what's really good and what's not, because you think if you bought it, because I tell people that I would rather wait for something to go back above its average and come back to it. And I'm going to pay a higher price, but I've got support by the averages for the stock not to go against me. If you're buying below the averages, you have absolutely nothing to stop. Nothing. And so that's just kind of the two main things I look at. And I have these simple rules that I tell people. Go long when they're above, go short when they're below. When they rally back to them or fall back to them, then you got another trade. So I hope that kind of answers what you asked me.
So I want to transition that to the pinned tweet on your Twitter profile when I shared it on that mess. This is kind of the issue, right? It's like, I really got to cut your losses, but the reason people don't cut their losses is regret, because if they cut the loss and then it comes right back, they get nervous about buying back in. Their framework is around where they sold. So is that really true on Amazon? Yeah. Talk about that for a bit, because I think it's interesting. And that's an extreme example, obviously. But.
Yeah, hold on. Let me get a shot of tequila. Well, no, it was the year 2000, man. The go-go days. Now, I'm a totally different human being than I was. What was it? Damn, was that 23 years ago? So, 23 and a half years ago. Amazon was a really hot high-flying stock, which there was a bunch of high-flying internet stocks in 2000. And I made a lot of money. But in the Amazon, I think it hit a high of like 130, 127 in 2000. And it dropped. And when I tell people this, it dropped it bottomed at $3. Okay. So I did not start buying Amazon to probably it was like $15. I was like, man, $15, man, this thing has got to bounce. So I bought, maybe 5,000 shares. And anyhow, it dropped another couple of points and I bought 5,000 shares. And then it dropped another couple of points and I bought 10,000 shares. And then it dropped another. Anyhow, long story short, I did that famous averaging down because I was going to kill this thing. This thing's got to at least go back to 30 or 40, right? Well, what happens when a stock goes below $5? It becomes unmarginable. And now you have margin calls, which used to come in the forms of pink slips. And man, I tell people and I've never seen in 2008 was kind of close, but 2000 was a brutal, long, drawn out, just never going up, just bear flag down, bear flag down, bear flag. And then everything just ground sideways for 2, 3, 4 years. Like from 2000, to 2005, the market was just totally sideways. I mean, like everybody was pretty much wiped off the map, blah, blah, blah. But yeah, I ended up just puking that all out because I mean, even when I sold that loss, I mean, I don't know what it was, but I had, I salvaged like 80 grand when I sold it. I was just at a point where, I mean, like, and at the time, people don't understand, at the time, there was speculation that Amazon was going to go out of business. Amazon in 2000 is not the Amazon of today. I mean, Amazon had a really big problem with delivery at the time. They didn't have this free delivery stuff. So, I mean, there was speculation they might go out of business, and I finally just couldn't take any more pain. And I sold it. And it was, of course, if I held a position to today, what it would be worth. I mean, that's not an exaggeration because I actually did the math. And it's kind of funny how, when I did that tweet, I had like 400 followers. And that was kind of like the tweet that put me on the Twitter map was, I always make fun. I give you all this good stuff. And y'all like this tweet the most. So, but anyhow, yeah, man, you know what, man? It's just one of those, it was an expensive master's degree. And I've never done that since. I don't hold stuff. I'm not a big long-term trader.
Uncle Pac, where do people find you other than Twitter? In terms of like, if they want to track your work or your content, your thoughts on market.
I'm actually a real novice at the social media thing. I only started tweeting a couple of years ago, and I did it just for fun. Honestly, it was a way for me to break up the monotony of trading alone. My father passed away and I was depressed. And that's the only reason I ever started tweeting. And I never even considered other people, whatever. But I do have a Discord room. I hadn't been in much lately because I just hadn't honestly decided what I'm going to do here. I applied for the Twitter subscription service, and I do have that, but I've been like really disappointed in how Twitter has handled things. And so right now you can just follow me here on Twitter, or if you wanted to subscribe, it's $9.99 a month. But, other than that, man, I don't have any other services. I don't have, wasn't even sure I was going to do like a service, but then I was spending so much time on it. I was like, man, I need a little bit of compensation here, man. So that's what I did. So right now I don't have like anything where, hey, if you want to see me do this, I'm considering it. I hadn't done it yet. Considering some options, but yeah, right now I'm pretty much just on Twitter, and I got a subscription service which just started. But other than that, that's about the only way you can follow me.
That's a good place to wrap the Twitter space up. Everybody, please make sure you follow Uncle Pac. Thank you, Pac. Appreciate it.
All right, man. Thank you.